Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Wednesday morning, August 11th, 2021, which also happens to be my birthday. So happy birthday to me. I want to thank everybody who's been sending me messages. I want you to know I really appreciate it. Today we're going to talk about earnings. I'm also going to give you a setup today for trading earnings, which can be very, very tricky. But the setup I'm going to give you is so easy to use that one thing you'll learn today is going to be worth every minute you spend with me today. Stick around. I'll be right back. So as with everything that we do, it's obviously required that we say everything we talk about is for educational purposes. It's up to you to make the final decision, whether it's your own or whether it's a financial advisor. So do the smart thing, really, really dig deep into making your decisions so that they're best decisions for you based on your goals, your resources, and everything that goes with making a decision. So market at all-time highs, probably the first thing we're going to talk about right now. It's amazing. The market is showing so much resiliency. Infrastructure bill is passed, got a little bit more of a hurdle, but we're also going to talk about today which stocks we're noticing prior to the infrastructure bill popping and which stocks we're starting to say, all right, order flow is peaking just a little bit. These are the ones where you can see they're in clear bearish order flow. But over the last week, over the last 10 days, they started to bounce a little bit. So they're not bullish yet, not buying opportunities yet, but the order flow is changing in the short term, which eventually leads to, assuming the order flow continues, breaking that downtrend, peeking our head through. Now we start to pay attention to, again, weekly order flow, monthly order flow. How strong do they close? Are smart money paying higher lows, holding up, and not making them go down anymore? That's really the big thing we need to pay attention to. So I'm specifically talking about industrial stocks. So we're going to work our way down. We have a lot to talk about, but first we're going to dive into the market. We're going to look at the sectors and the right stocks within sectors. I'm also going to give you a sneak peek at the entire list of stocks that will be in my game plan for today. So we said we're only going to talk about those two earnings plays, actually three if you include Triple D, and we're going to start out with the market. So let's head on over to the screen. And it's interesting. If you are an active day trader right now, it can be very frustrating, for lack of a better way of putting it, unless you do exactly what we're talking about right now, which is having a organized game plan every day. And I'll show you what I mean. This was the chart of the S&P 500 yesterday, the SPY ETF. We rallied, got hit hard, rallied all the way back again, and then just kind of melted lower in the afternoon. Now, that can be frustrating if you're only relying on the market and you don't have a system for putting the right stocks into your game plan by first following the order flow. And that starts here. That starts with sector rotation. So we'll get to that in just 1 second. So what's kind of interesting right now is last week we had posted this. This is the window that the market's in right now. And when it gets out of that window, we'll have hit new levels and then trading becomes different because now we have more room to go. It's kind of, if you saw the movie Trading Places, where Mr. Valentine has set the price, that's the price of where the SPY was. And it was, I'm not going to say frustrating as much as we just had to work a little bit harder. And you know what? That's actually probably something that we should really discuss. A lot of people started trading last year during the low of the global crisis that we had. And fueled by all of that stimulus money, the market just kept going up and up and up and up every day. And it was relatively easy to be in the right stocks. A lot of stocks just had this vicious move to the upside, and it was perpetual. It was month to month to month. We had a little bit of a pullback at the end of the last summer, but then we took off again. If that was you, if you're a stock trader and you were buying stocks in that window, it was a glorious time to be a trader. Let's put this into perspective right now. We're still sitting at all-time highs. It's not like we have crashed. We are just finding it a little bit more now. You got to put the overalls on, act like a pro, dig a little bit deeper, do your game planning every night like we're doing right now, and go find the ideas. We're getting a lot of questions right now because the market's kind of chopping around. Is this the best time? I wish I would have started at a different time. I'm going to give you a heads up. Last year, probably about 14, 16 months of trading was a glorious time to be involved in the market. It was a glorious time to be an active trader. But there's always money to be made. There's always opportunity to be made. You just have to dig it out. You have to do the game planning. You have to have a structure. Our structure is order flow and tape reading. You need a structure to say, that's exactly what I'm looking for. And when I see that, Is it in the market? Is it in the sectors? Is it in industry groups or individual stocks? We've had plenty of opportunity where solar stocks were on fire, electric vehicle stocks were on fire, not literally, and those were the easier sectors to play. Right now in the market that we're in, we got to dive a little bit deeper into individual stock-specific ideas, which means that we need to game plan a little bit more depth. And that's where you ultimately come up with a list of stocks. So that actually, you know what, let's start out with that list. So this is the list. And the interesting thing here, whether you look at the sector rotation or whether you look at just running scans, you start to see clues. And this is really one of the most frustrating parts for traders is they say, I'm not sure which stocks to be in. The market's overwhelming. There's just too much information out there. And that really just means that you're not sure how to search. You're not sure how to scan. You're not sure how to do screening. Got plenty of videos on the channel. I'll post a couple of them for you at the end of this video to give you some feedback, to give you some structure, to give you something you can write down and follow. There is a ton of opportunity. The challenge we're having right now is sometimes that opportunity is changing from one week to the next, and you can't be lazy. You have to get in there, do the hard work, and go get that money. This is what's going to separate somebody who has all of that financial freedom and you feel in control of your ability to make money because you went just a little bit further. Again, a lot of people say the extra mile is not crowded because it takes work to get there. You do this little bit of extra work, you'll be very, very happy that you did. And hopefully during these videos, I'm giving you that structure. And by the way, if you happen to enjoy these videos and you find them valuable, if you could please do me a favor, click down and subscribe. Smash the like button. That'll let me know that this is the kind of content that you enjoy. And definitely leave a comment below. I'd really appreciate it. So getting back into looking at the market and the individual stocks, despite the fact that the market was in a very tight range, and I'll just point out what that looks like again, where we call melted candles. So again, we had a week of a trading range, and now we broke out, and the open and close were very similar to each other, which is a melted candle, right? So if I could just walk you through what that means. So if a stock opens here, trades all the way up to here, trades all the way down here, and in that window, it opens and closes in basically the same price or very close to each other, that's indecision. You had all of that trading, and it doesn't matter if it's a 5-minute chart or a daily chart, you had all of that trading, it ends up in the same spot. Because of that indecision, it can be a little bit tougher to have conviction, which means that you need to go a little bit deeper into those lists. So we're going to get right now into what other lists you could be trading and catalyst, earnings catalyst right now. So we're going to take a look at 3 stocks, one that we traded very actively yesterday. It was up 40% at one point, fell 15%, and was still up a pretty good amount for the day. Would have liked to have seen it close stronger to have a little bit of a better feel for trading it today. But let's take a look at that stock right now. And then I'm going to give you the trading strategy for trading earnings. That to me is one of the most simple ways of avoiding the confusion that could happen. Is it a good earnings? Is it not good earnings? And I'll show you what I mean right now because you could use it in 2 stocks today. So obviously I'm talking about Triple D yesterday. And as you can see, it was up at one point. It was all the way up here over $40. Have to sneeze, excuse me. The sneeze is coming. Anyway, let's first take a look at what it did yesterday. Okay, so here's the opening price yesterday, and this stock was just an absolute beast during the day. It started to turn a little bit here. This one down candlestick on heavy volume is really where the tide started to turn. We're actually looking for a spot to bid here after it pulled back. Never found a bid. It popped in our favor a little bit. Took a very small profit. But what I want to point out here, and obviously this is the day that the earnings came out, and the reason I drew this line is now you can use this as a simple strategy. So remember what I just talked about with melted candlesticks, where it opened here and traded up here and traded down here. But this is the key. This is the one price. This is the key to everything. That one price is what you need to know. So the day after earnings, when the market opens the next day, that opening price is what you're going to use as your line in the sand. That's the beginning part of tape reading. Is it above that price? So, for example, Triple D yesterday, the opening price was $32.55. So that's the line in the sand that I'm watching for a swing trade in Triple D. As long as it stays above $32.55, that's all I need to watch. So we would do the same thing today in, again, let's take a look at a couple of other ones that we're going to watch today, which are FUBO. The stock's been a little bit tricky, so what we're going to use is a simple way of doing it, and I'm going to show you using last week's price action. Actually, you know what? Let's use this week's price action. So earnings just came out last night. You can see the stock is up 30 to 31.59. It's up 10%. So let's just say on this weekly candlestick. Now today is Wednesday, so 2 days of trading have already gone by. So you have to visualize right now when earnings comes out. This came out last night. When price opens this morning, it's going to open up somewhere in this area up here. You're going to draw a horizontal line at today's opening price, like you see here, and that's going to be your stop loss. That's where it's going to be the price that needs to stay above. So think about what we just did. Out of all the potential earnings reports and everything you could possibly read and every news channel and every YouTube video, all you need to watch is that one price. When FUBO opens today, when UPST opens today, when Triple D opened yesterday, it gave us that level to watch for a swing trade. That's about as simple of an earnings play swing trade strategy that you will ever get. And you want to know something? If that's where it opened, if smart money can hold it above that price, you don't need to make things more complicated. Keep it as simple and easy as possible when you're looking to buy stocks, because that's the only thing that matters. What one price matters to you based on the reason, the catalyst, in this case, earnings, what one price matters to you, that makes it very easy to make a decision. The only other decision you have then is perfecting your entry so that your stop loss and your risk is comfortable for you based on your goals, your risk, your resources, your risk tolerance, and the amount of capital that you have allocated to that position. So we're going to look at FUBO. So again, FUBO is going to end up opening up somewhere around here. Let's maybe say just a little bit higher, 31. Let's just say 31.60. That's where it's going to open. That would be the line in the sand. It needs to stay above that. Then we're going to look at UPST. Very, very same thing. So UPST is going to open up around 160. Let's just use 165 as the level. So it's going to open up all the way up here. So let's just say that's the exact price it's going to open up. As long as it's above that level, you're looking for this kind of weekly candlestick. And if you get it, those are the easier swing trades to manage because you're not guessing anymore. It's literally telling you what it's looking to do. So moving back over to our list of financial stocks, which actually happens to work its way back to the top of the sector rotation chart. And what's interesting to see is yesterday's price action was not amazing, as we saw in the big list, in the picture of the SPY. So a very quick look back over at the SPY. For opportunity here, the QQQ actually closed negative. And if we look at the diamonds, a big difference, right? So why is the Dow going up? Well, as we said, watching sector rotation, we're starting to watch industrial stocks work their way up to the top of the list. So what does that mean? What does that mean as far as opportunity? Well, we just talked about financial stocks. Now you got to be really on top of which financial stocks. We've been talking about in the community Morgan Stanley. We've been talking about Goldman Sachs. We've been talking about Citigroup starting to break out. You can see it finally got through this level. Some other financial stocks that also meet this criteria: Capital One broke out. Discover Financial broke out. Okay. What's not breaking out? Credit card processing companies. Okay. Visa is not having a good month so far. MasterCard not having a good month so far. PayPal not having a good month so far. So remember what I said before. It's not hard to find these ideas. As a matter of fact, it's very easy to find the right ideas. We did the sector rotation first, then we went to individual stocks within those sectors. So we came up with financial stocks and which financial stocks. Now we work our way over into industrial stocks are starting to gain a little bit of strength. So now let's take a look at specific industrial stocks. So we're going to work our way over into BLDR. And you can see here over the last few weeks, not perfect. You can see the longer term downtrend. We got a push and a pause, a push and a pause. So the next move should be higher. So we'll take a look at BLDR. We're going to take a look at, believe it or not, General Electric. Again, not perfect. We're talking, if you can visualize, like we said, you start to anticipate based on what's happening. So we need to break that trend line, and we're kind of like right there, right? So General Electric, Boeing. Again, we're looking at this. We're seeing the signs prior to the infrastructure bill passing, a little bit of private mojo where it's bouncing, but not catching your attention because it's still in this down move. But if you do the work and you watch the way we do this every day, you start to spot the patterns from 1 day to 1 week to 1 month. And these ideas start to emerge before, and that's the key. when you do the homework, these things come up in your scans before you start to see them on headlines on CNBC. That's the difference between somebody who expects to make money and somebody who's struggling to make money because you're doing the extra work. So working our way back over to industrial stocks we're going to be watching. Let's go back over. So we discussed Boeing, we discussed Caterpillar, and you can see again, breaking this long-term downtrend. We need to get up, but this is interesting. You start to run these scans from one day to the next, and you start to see ideas. Okay. UAL, not yet. Again, longer-term downtrend needs to be broken, but we're looking at the right ideas. EMR. Okay, you could start to see putting the pieces together. ETN. All right. So what does this all mean right now? What's the whole point of today's video? The whole point of today's video is that I want you to believe in yourself. I want you to believe that if you have a process, if you have a structure, you should wake up every day expecting to make money if we get follow through. And that terminology, if we get follow through, is really one of the biggest things that if I teach you anything, that's really the biggest thing. If you did your homework, if you have an edge, if you understand how to read the tape, if you understand position sizing, if you understand finding a good entry and exit, you did the hard part. The next part is just having the right mindset, which is, okay, I did everything I was supposed to do. Now we're looking for follow through. Some trades follow through, some trades don't follow through, but that's where the money's made. The money is made first in the research. The second part is gaining the skill to understand how to manage that position. If we get follow through, should you add to it or book a profit? If we don't get follow through, at what point do you scale out or get out? That's where the magic happens. Two very simple things. Find great ideas and then learn how to manage them. I hope that I've helped you in this video today. Let's go make some money today. Thank you so much for joining me. I really appreciate it.